The Google story, Spencer Michels reports.
From Silicon Valley to Wall Street, the buzz is that Google, the 6-year-old privately owned company that created the world's most popular internet search engine, may soon issue stock and go public. That prospect has prompted intense interest in Google and in the possibility of a rebound for high-tech. Google would become the first major high-tech firm to issue an initial public offering, or IPO, since the dot-com bubble burst in 2000, casting a pall on the whole field of technology. Veteran stock watchers like Tom Taulli, who writes and teaches about corporate finance, are intrigued.
It's really interesting, the phenomenon, even the mania. I haven't seen this since the late 90s, or the mid-90s with the Netscape IPO.
On the Stanford University campus, where the founders of Google went to grad school, there's great anticipation about a Google IPO, especially among business students.
I'm definitely interested in seeing what's under the covers when they disclose it all in their public statements.
They have been very aggressive at getting, the brightest minds. So many smart people cannot go wrong. 4 of my classmates from undergrad are at Google, and 4 of my ex-colleagues are at Google. So we're all hoping that Google's going to make them all very rich.
These students and others in the investment community say Google's going public could spur a renewal of enthusiasm for high tech.
The IPO market was shut down basically over the past 2.5 years. And so this IPO can really have a huge impact to show the people.
Greg Raifman took his former internet advertising company, Mediaplex, public and watched as its price soared and then plummeted. Now running an investment firm, he's watching the Google phenomenon and says an IPO could energize not just Silicon Valley, but Wall Street as well.
There's no question that Google's the flag bearer, if you will, of the return of the IPO, the big IPO. The interest level around investment is higher because of the Google IPO. Wall Street loves that because the average folk is asking, how can I get shares in the Google IPO?
Today, Google is going strong. It has 1,500 employees, most of them in its Silicon Valley headquarters in California. It has recently added email, an online shopping service called Frugal, and Orkut for making business and personal contacts, to its main feature, its innovative search engine. Google handles 200 million online searches a day in 86 languages for all manner of topics, using thousands of high-speed computers which comb through the internet at the speed of light. The results of those split-second searches are displayed on the user's computer along with text-only advertisements placed near the search results. According to Charlene Lee, principal analyst for Forrester Research, those ads plus sales of Google's ad technology have made the company highly profitable.
Advertisers love it because they can target people online who are looking for their products, as opposed to general advertisements.
Lee says Google's profitability would make for a successful IPO.
They have close to $1 billion in revenues. It's already proven that it has a business model that works, it has very loyal users, and it continues to innovate.
The company's exact profits are a matter of conjecture. Analysts are estimating its value at anywhere from $6 to $25 billion. In recent months, Google appears to be following government guidelines for companies going public by remaining silent about its intentions. Google, which recently expanded to these quarters, has not filed anything about an IPO with the Securities and Exchange Commission. Nevertheless, the company won't comment about a possible IPO, saying it's private and it doesn't discuss its finances. Others potentially involved, like investment banks, won't talk either, saying they fear legal action if they do. Google's CEO, Eric Schmidt, wouldn't comment either, but his company has never denied its interest in an IPO and has said eventually it expects to go public. And now the market has improved and the timing may be right. Marc Andeessen, who took public both Netscape and his current software company, Opsware, says that for any growing company, pressures to issue stock increase over time.
Your venture capitalists want to be able to distribute their stock and sell it, which is very difficult for them to do if you don't go public. You want to be able to go buy other companies and consolidate your industry, which is much easier to do once you're public. Third is, ultimately, you want to give your employees a liquidity path, a way to ultimately sell some of their stock to be able to put their kids through college or buy houses or whatever. So.
And what about the downside?
Oh, the downside, you're open to public scrutiny. Every single quarter, everybody sees all of your financials. Your competitors see all of your financials. Investors see all your financials. Your stock price is going to go up and down and up and down. That's going to affect how people think about your business.
Former CEO Raifman says from his own experience that newly issued stock can cause employees with stock options to lose focus.
There were times when I walked down the hall and saw that employees spent maybe a little too much time looking at the quotrons or the computers that they did dealing with customers and clients.
Distraction can be fatal if a company is facing major competition, and Google now has big-time rivals. At Netscape, Marc Andeessen lived through a similar scenario.
All of a sudden, every big guerrilla company out there, Microsoft and every other company, suddenly starts shooting at your head with high-powered ammunition. So, in my experience, usually going public coincides with a big escalation in competition for much larger companies.
Rivals Microsoft and Yahoo offer a variety of services like email and shopping on their home pages called portals. And both are developing their own improved search engines. Analysts say they appear ready to take on Google.
I think Google at this point is winning the battle for search. Yahoo is winning the battle for portals. And Microsoft has a lot of it's always in running. It's like second in many of these places and gunning first.
You think Google's in trouble?
I think Google needs to stay on its toes because in the past, again, it's had the luxury of being very smart, very innovative, but now you've got very strong competitors.
Including Yahoo, including Amazon, maybe even eBay.
And writer Tom Taulli points to another hazard for potential Google investors. Most new stocks drop in price.
Historically, they go down. On average, they go down after 1 or 2 years. So it's usually a losing proposition from the investor standpoint. But those are averages. If you happen to get the Microsoft, you happen to get the Oracle or the eBay, it's a whole different story.
The likelihood of going public and the specter of Microsoft and Yahoo may be spurring Google into new arenas. Its launching of additional products in recent months is part of its strategy to keep ahead of the increasing competition at a crucial juncture in its short history.